is Vedanta running a Ponzi scheme? That's the allegation. A US-based firm just dropped a bombshell. They say Vedanta, which is one of India's largest metal and mining giants, is running a structure that looks dangerously close to a Ponzi scheme. That firm is Viceroy Research, and their 87-page report calls Vedanta's financial model unsustainable, destructive, and doomed to collapse. So, what's a Ponzi scheme in the first place? It's when money from new investors is used to pay old ones. There is no real business underneath, just a recycling of fund until the whole thing crashes. And Viceroy says that's exactly how Vedanta is functioning. At the center of this web is Vedanta Resources Limited, the parent company. They call it a parasite, a firm with no real business of its own, surviving purely on the cash sucked out of its profitable Indian arm, Vedanta Limited, the one which is listed on the stock exchange. And here's how the draining works. First, forcing major dividends. Over the last 3 years, Vedanta Limited paid out more than $8 billion in dividends. Sounds generous. But here's the catch. The company didn't actually earn that much. Viceroy says there's a $5.6 billion shortfall between Vedanta's cash flows and the dividend it handed out. In simple terms, a company is borrowing money just to send cash up to its parent. And who decides these payouts? Viceroy claims they are dictated by what the parent company needs, not what the business can afford. Second, brand fees that make no sense. In financial year 2024, Vedanta and its subsidiaries paid $338 million in brand fees to the parent. But here's the strange part. The UK office supposedly licensing the brand was shut down months ago. So where is this money going? Viceroy says there is no clear commercial logic. Worse, those same brand fees are being pledged as security to borrow even more money offshore at high interest rates. Third, a $956 million loan that was never paid back. Vedanta issued a loan of nearly $1 billion to a group of companies linked to its parents. At least $122 million of that has been written off, never recovered. And what was this money used for? To buy even more Vedanta stock, meaning the parent is using Vedanta's own balance sheet to gain even more control over it. Fourth, suspicious interest cost. Vedanta Resources claims it pays 15.8% on its $5 billion debt. But here's a red flag. Its public bonds only cost about 9 to 11%. So where is this extra interest coming from? Viceroy says it could be undisclosed loans, shady debt arrangements, or outright misreporting. Whatever the reason, they say the numbers don't add up. And that's just the start. The report also points out two issues in Vedanta's subsidiaries. Take Hindustan Zinc for instance, where a failed smelter project could cost the company a whopping 88,000 crore rupees if the government enforces a default clause. ESL Steel is another one, which has been flagged as a going concern risk and where nearly half the capital expenditure went towards illegally occupied forest land. That land, by the way, was later shown as an asset on the balance sheet, helping inflate the numbers further. Fujairah Gold, accused of using suspicious raw materials and dealing with known gold smugglers. Even the auditors raise eyebrows. The parent company's auditor, MHA McIntyre Hudson, has been penalized in the UK for poor oversight. Vedanta Limited's auditor, SR Batley Boy, an EY affiliate, was banned from auditing Indian banks after being linked to ILNFS fraud. And many global subsidiaries are audited by, get this, 2 partner firms operating from a Hotmail account. On top of all this, a talent exodus. Since the company announced a restructuring, many top executives have left. CEOs, CFOs, and even the general counsel. Viceroy says it's a sign of serious trouble brewing inside. So, what is Vedanta saying about all these serious allegations? They've hit back hard. calling the report baseless, malicious, and ill-timed, especially since they are in the middle of a large restructuring. They say Viceroy never contacted them before publication, and they question the credibility of a firm, by the way, profits when the stock crashes. Because Viceroy, remember, is a short seller, just like Hindenburg. If Vedanta's stocks tank, Viceroy makes money. So who do you believe? On one hand, Vedanta says this is a market manipulation. On the other, Viceroy has a track record. They have called out big collapses before, Wirecard, Steinhoff, Adler, and claim they have been right 80% of the time. And they are not mincing words. In an interview recently, Viceroy said Vedanta is functionally bankrupt and this will end in a disorderly collapse. The market didn't ignore it. Vedanta fell 8%, Hindustan Zinc has dropped 5%, and Viceroy has already won. There is even more to come.